Good afternoon, everyone, and welcome to May edition of Business Day Millennial Hangout. Today's topic is investment opportunities and is one that is very crucial to our generation with the rising inflation and global uncertainties. Understanding how and when to invest is something very important. And I am delighted to be your moderator for today. I am Ethel Adono, a social media strategist at Business Day. And of course, I am not here alone. I have amazing speakers here with me. So joining me are brilliant minds from investment and banking sectors all over the world. And I am very delighted to introduce our guest speakers to you all. So first up, we have Fatima Adeyibigbe, who is a dynamic sales and marketing executive with over 15 years of experience in real estate, property development, and corporate marketing. She is known for her strategic foresight and executional excellence. She has informed she has transformed underperforming portfolios into profitable, high-performing assets across Nigeria's competitive real estate sector. Fatima currently serves as the head of sales and marketing at HH Holdings Group, where she leads the business development and revenue strategy for the group's real estate division. Her mandate is clear: turn visions into value and ensure every property delivers measurable returns. If you can hear me, Fatima, thank you for joining us today. Please say hello to our listeners.
Thank you for having me. It's an honor to be on this program. And I
Thank
hope that
you.
at the end of the day, everybody will learn something different. Thank you.
Thank you for being here. So, our next speaker is Imelda Usoro Olaoye, a seasoned leader who has worked in various sectors of the economy. Imelda is an expert in real estate sales, marketing, consultancy, using new tools and technology. Having successfully launched and run an award-winning real estate digital marketing firm, ThinkMyth, with branches in Lagos, Nigeria, and Estonia, Europe. She started her real estate sector marketing career in Clarence, UK, after which she joined Property Pro Niger, where she rose to lead the company's media, real estate transactions, and exhibition team. Prior to this, she has worked in the banking and pharmaceutical industry. Imelda is a member of International Real Estate Federation. She is also the founder of Business Women Hub, a non-profit organization dedicated to the growth of female-owned businesses, especially within their first 5 years of existence. Thank you for joining us, Imelda. If you can hear us, please say hello to our listeners.
Hi, hello everyone. It's a pleasure to be here.
Thank
I look
you.
forward to an insightful conversation.
Thank you
Thank
so
you.
much for joining us. Also, joining us is Ronke Adenle, who is a results-oriented financial service executive with 18 years of experience, progressive with 18 years of progressive experience across commercial and investment banking. She is currently the Vice President, Channel Sales at Cordros Securities Limited, where she leads efforts in expanding market channels, managing key client relationship, and supporting strategic growth in investment banking services. Ronke began her career at Zenith Bank plc in 2007 in the cash and teller unit, where she advanced to the position of cash officer in 2012, heading the unit. She transitioned into marketing in 2015, gaining valuable experience in business development and customer engagement. In 2023, she made a strategic shift into investment banking, bringing in with her a unique blend of frontline client experience and financial insight. She's an associate member of Chartered Institute of Bankers of Nigeria, and her core strengths are relationship management, business development, strategic sales, and client retention. Thank you for joining us, Ronke. If you can hear me, please say hello to our listener.
Thank you for having me.
Yeah, it's a pleasure to have you too. Next in line, we have Oyeyinka Oyikon, a seasoned professional with over 18 years of experience in the financial service industry, spanning treasury markets, business banking, and wealth management. Through his career, he has worked with top-tier financial institutions including Fidelity Bank, Access Bank, Stanbic IBTC Bank, and Stanbic IBTC Asset Management. In 2023, he joined Cowrywise Financial Service. In 2023, he joined Cowrywise Financial Technology Limited as the head of high net worth individuals and corporates. He is passionate about knowledge sharing, and he engages various platforms to discuss topics such as financial fitness, business growth, and business finance. Oyinka has authored some books including Attitude for Success, Becoming a Wealth Manager, The Credit Analyst, and Work, Wellness and Worth. Thank you for joining us, Oyeyinka. Please say hello to our listeners.
Hello, glad to be here.
Thank you. Thank you all for being here today, and I want to appreciate our listeners. Thank you for joining us. As you can see, we have got incredible speakers here with us today, and I can't wait for them to unpack what they have for us. So stay tuned while we proceed with the Okay, so I'll be calling our listeners in no particular order for to give us a short presentation for just 10 minutes each. So I would like to start with Ronke. If you can hear me, please unmute and then share your screen if you want to. Thank you.
Thank you. I'll share my screen shortly.
Okay, thank you.
Please let me know when you can see my screen.
All right.
And please let me know when you can see my screen.
Okay. Yeah, your screen is up now. I can see it.
Okay. All right. Thank you. Thank you for the introduction earlier. As we all know, my name is Ronke Adene. I currently work for Quadra Securities Limited, and I am in the channel sales unit where I oversee the general sales team. So essentially, this slide, I know I have 10 minutes. I'll just try and compress everything I have to say within 10 minutes. It's a short slide anyway.
Thank you.
I titled this presentation Financial Planning and Investment Opportunities in Nigeria for Millennials, since it's a Millennial Hangout. And essentially, I'll just be tackling the topic from the financial services point of view. So the first thing to note is that Codros is a financial services organization. We have about 6 companies in the group. So the parent company is called Codros Capital. We have our asset management, securities trading where I sit, investment banking, registrar services, insurance brokers, and trustees. So essentially, we're very equipped to render all sorts of financial services in this space. We have over a decade of experience in Nigeria. We have a very diversified client base. We have institutional clients, retail clients, we have foreign and also local clients. We also have a very deep industry network, and we have a very robust sales team. So this slide just speaks to the different businesses and what the businesses offer. Now, going straight to the reason why we're here. Nick Murray once said that wealth is not determined by investment performance, but by investment behavior. Essentially, what that means is it's really not about how your investment is performing per time. I think someone needs to mute So it's not necessarily how the investment is performing per time, but about the behavior of the investor. So we have things like you not panicking when you feel like maybe there's a downside, or when there's a bit of market volatility. It speaks to your consistency as an investor. It speaks to your knowledge of the market and your knowledge of investment, or the investment that you want to do. So essentially, we're saying that for you to grow wealth, or for you to grow your investment over time, you should also know when to go into a buy or when to do a sell. When you should also not be too greedy. So essentially, your investment and the way your investment grows is largely determined by the behavior of the investor. So what's the importance of financial planning? A bit of research was done and realized that out of about 100 people at retirement, 9 of them will be dependent on their family or charity. 29 people will probably be dead, maybe due to poor lifestyle choices and not necessarily old age. 12 of them will be broke. 5 will still be working because they still need to work to sustain their lifestyle even after retirement. 4 might be financially independent, and maybe just 1 out of the 100 will be rich. So the question I put to us today is, out of this segmentation, where will you be? Financial planning, comes with a lot of misconception, if I may say. Some will say financial planning is only for rich people. Some will say investments is the same as financial planning. A lot of us millennials will still say, oh, we're young, we're too young to be thinking about financial planning. And the like, some will think that insurance is the same as financial planning. However, financial planning is just the art and science of managing the totality of your financial resources. So the end goal is just for you to have a comfortable future. So financial planning has to be systemic, it has to be consistent, and it also has to be cumulative. So having said that, financial planning will also include, insurance. Your financial planning will also include like your estate planning, as well as your investment planning. Benefits of financial planning, after having spoken for a few minutes, can definitely not be overemphasized. It helps you to improve your cash flow for a better balance. It helps you to increase your savings and optimize the growth of your wealth as well. It helps you to plan comfortably for your retirement years, so that you are secure, you are comfortable, you are not running helter-skelter, and you don't become a burden to friends and family. It also helps you at the end of life to transfer your assets in the most effective way to your heirs, or to people coming after you, and to ensure that people who have no rights, being a part of your estate or taking out of the largesse of your estate, it ensures that you can fend them off. So in the Nigerian market, and part of what we do at Quadros, we have, like I said earlier, we have a very robust equities trading desk. In fact, the business actually started with Quadros Securities in 2007, and I can say, here that the equities market in the last 4 years, has, shown a very, very strong performance. A lot of cash flows from dividends. A lot of, I think, one of the top banks paid dividends, I think, 2 weeks ago. You have good entry and exit liquidity. The equities market is a market that is really thriving at the moment because of the fact that the economy is on the upswing, and a lot of companies in different sectors are also doing very well. So one of the opportunities that we can look at as millennials for our investment is to look at the equities market. Although it's a market that can also be volatile, the way you make money is also the way you can lose money. So you have to understand the market, know when to enter. You shouldn't be too greedy. When you've made a certain level of profit, you should be able to close out on your trades. And then depending on what your financial goals are, there's some equities that you hold for a longer term, towards your retirement. Some equities you hold because you just want to trade on those equities and make quick returns. We have other opportunities in the fixed income market space. You have treasury bills, commercial papers, and you also have bonds, government bonds. You have private bonds as well. You have euro bonds, fall into that space. I think 2 days ago, a FGN Sukuk bond closed, and that would have also been a very good opportunity for anybody to like take a position for an instrument like the Sukuk bond. The coupon will be paid twice every year until maturity of that bond. So these are, very good opportunities that we can make ourselves, that we can avail ourselves on in the financial markets. Okay, we also have other fixed income products. I mentioned euro bond. We have euro bond notes as well. In Codros, our liquidity management product is also like a fixed deposit. So we have that opportunity as well. A lot of us, I think, before now, I think it's a practice that a lot of people just keep money in the bank idle. The funds are not really yielding anything. So it's better that you move monies, into products or into investments that can give you very good ROIs. And this is just depending on what your investment goals are. Like I said earlier, some of us would have short-term goals, some will have long-term goals, some would have mid-term goals as well. Others will probably be saving towards maybe your child's school fees, or saving towards trying to like buy a house or get a property. So whatever your investment goals are is what actually kind of underlies the kind of investments that you do. So you shouldn't have an investment mismatch. That's the whole idea of that statement. We have our Codros Money Market Fund as well. Current yield is at about 21%. Our money market fund will kind of mirror a savings account that you have in the bank. So instead of just keeping the funds idle in the bank, you can be in a mutual fund account. You have access to your account online. You can view your funds. You can see how the funds are growing, and when you need to take your money, you just do a redemption of those funds. And income distribution on the Naira mutual fund is done quarterly. On the dollar fund, it's done annually. Thank you. I hope I didn't rush too much.
Not really. Thank you so much, Ronke, for sharing with us how Codros can help one manage assets and different opportunities they have for us. Thank you. So I would like to call on Imelda to also give us our own presentation. Thank you.
All right, thank you.
Thank you for
okay, so I think Ronke needs to end hers.
so I can share. Okay, Ronke, can you stop sharing your screen?
Done. Thank you.
Thank you.
Okay. All right. As a real estate practitioner, please let me know if you can see my screen.
Yeah, I can see your screen. Yes, I can.
Okay, can you hear me clearly?
Yes, loud and clear.
Okay, great. So I'll just try and be very quick, and I'll be taking our investment opportunities presentation, from the sector that I work in, which is the real estate sector. Having practiced real estate for almost actively as a ThinkMate Nigeria for 5 years, and as an individual for about 10 years of my life. This is coming from a wealth of experience and client management as well, because running down what we do at ThinkMate, we're a real estate marketing firm. So what that means is that we do not build, we're not developers, and so I'm coming as a bridge or as a gap between the developers and the consumers, as the case may be. And I termed the presentation as real estate backed investment opportunities, scam or not. So I'll just quickly run us through the slides. First, it's an honor to be here with millennials, myself being one. who are shaping the present and future of our economy. As the presenter or the host has earlier introduced, my name is Imelda Osoro. I'm the founder and CEO of Think Made Nigeria and Europe. I spent a couple of years, as I mentioned, navigating the world of real estate investment in Nigeria. And there's something I would like to talk about today that is very close to my heart and every young investor. As I mentioned, I'm also a millennial, and so I sort of like understand everyone who is going to be joining this show today. And the topic is real estate backed investment opportunities, whether it is scam or it's not a scam. Of recent, aside from what is written on my slide, there's something that I saw on LinkedIn last 2 weeks, or was it 3 weeks, that struck me. And someone was, that was when there was something that happened, the CBEX thing happened, and then someone gave a very lengthy breakdown of real estate investment. How, why? The person was more like asking the question, why is it not the same thing as CBEX? Why? Because now there are lots of companies who are doing the buyback scheme or investment in real estate scheme to gain returns on investments, which is actually not you purchasing a house, right? But you investing and getting returns on investments on your capital. And the person was like, so why is it not a scam as well? Because it seems like, how are the developers going to pay you back your money? It's really open-ended and all of that. And so these are some of the things I'm going to be talking about today. And of course, I won't blame the person that raised that conversation on LinkedIn. It was a very lengthy one. A lot of people jumped in on the conversation. I won't blame that person because there's so many guaranteed returns that have gone wrong. And we've had stories of land scams, ghost developments, and very unfilled promises. And then there's also the rising desire to build wealth, which we all know. I'm sure that we all understand. We heard from Ron here the reason why you need to build wealth, especially as millennials. If you're 36, as I am, or maybe approaching 40 already, as far as I'm concerned, that's really very close to retirement age for me mentally, right? And so there's this desire to build wealth, there's also fear of being scammed. So these are the reasons why some of these questions are being mentioned in the past. And so what we're going to try and sort today is, are real estate backed investments, are they really a scam? But first of all, let's set the record straight. Real estate itself is not a scam. However, there are some schemes that are marketed, and some schemes marketed and who runs them can make all the difference. So I'll tell you about how you can tell a scam from a structure, the models that actually work, and what to look out for before investment. Now, the truth of the market, the truth of the matter is that of all forms of investment that one can ever take part in, real estate is the one, actually one of the ones that will give you very high returns. Studies of this year that was analyzing the financial situation of the economy in Nigeria this year, and even globally, stated that real estate has actually beat the oil and gas markets in Nigeria to become second, followed by agriculture, and is actually closely followed by agriculture as part of the sector that contributed greatly to the Nigerian GDP, and then even globally as well. And so we can tell that real estate is one investment that can give you very huge returns of investment beyond what is currently obtainable at the markets, right? You can get as high as 50% returns on investment over a year, and even more than that, depending on how you enter into the real estate market. And so it's very, very profitable, but yes, there are scams. And how do we tell the difference, tell the scam from the structure, the models that work, and what to look out for before investing in real estate? And so there are three pillars of a trustworthy real estate investment. There has to be a product, a physical property or land, and then there has to be clear terms, ownership structure, documented risk, defined ROI, duration, and buyback or resale options. This has to be very clear. If not, it's not a venture that you should go into. Like I mentioned, it's highly profitable, but then you need to tell the difference. You need to know which one is real and which one is not real. I mentioned physical property. There has to be property. There has to be land, either a project ongoing or there has to be land in itself. There has to be clear terms. The person that you're going into the transaction with, what's their link, their ownership link with this land? They have backed documentation to show that they own this property that you are investing in. And then, of course, there has to be defined terms of your ROI. It has to be clearly documented, clearly stated, and backed by collaterals. As I mentioned, this is a topic centered around not actually buying into real estate now, but investing in real estate projects to get returns. And so there has to be defined returns of investment, clearly stated. Your lawyer needs to look through all of those documents, and then you need to clearly state the duration. What happens if they fail to pay you your money? Clearly stated. Is this agreement something that you can use in a court of law if in case there is a problem? Are there ways to get back your money? The buyback plan has to be clear, and then there has to be resale options. So what that means is that even though you are investing in a project that you do not actually own or that you're not buying, right, it has to be backed by an opportunity for you to own that project should your return not be paid. I don't know if I was very clear there, but right, you're investing in a project. You're not, the plan or the aim is you're putting capital to earn a return. I just mentioned, for instance, 40%, 50%, depending on the duration of your investments, right? And then it has to be clearly stated, okay, if I don't get back my returns at the end of the period with my capital, then I own a unit in the project or I own a land, something. There has to be a link sort of for you to exit the transaction in any way, whether through your returns, which is actually what you need, or a property, as the case may be. Now, these are the three pillars of a trustworthy real estate investment platform. Now, I'll talk about the buyback again, which I've sort of like mentioned here. It's a very safe path for first-time investors, very safe and very easy to access. You don't need all the millions. We know that real estate is an expensive asset. We know that it's not really easy for people to get into real estate, especially the younger millennials. And then, even across all the millennials age group, right? It may be a bit expensive to begin to say you want to own a property, but you can plan towards it through the buyback scheme, because you can start with little investment, and little as 1 million naira. You can begin to plan towards using your returns as a means of saving towards your home. We heard Ronke talk about the fact that it's actually not good. Money lying fallow in the bank doesn't really make any sense. So you need to invest it. And one way to invest it is through the real estate buyback scheme. It's very safe for first-time investors, very easy to access. There's also a guaranteed buyout at a fixed period of time, I mentioned earlier, depending 12 to 24 months. And then there are also pre-agreed returns. There's legal documentation to protect investor funds. The highlight of this is that the real estate, like I mentioned, is used as asset backing. You earn while the developer uses your capital for projects, because the truth is that the developer needs money to build the project, and then you are sort of like investing towards that project, whether it's a land development or it's actually a housing project, right? You're investing towards it, helping them to build it, and then they pay you back returns. Because on the average, right, the average return on an off-plan property or a project at construction stage is a minimum of 30%. That's the minimum. Like, too bad. The market is too bad. The minimum is 30% at the end of construction. And this is if you're doing a construction of 6 months. If you're doing 12 months, it can get to 50%. I think in Nigeria in 2020, we've sold units of terraces on Orchard Road. If you know Orchard Road, Lagos, for 35 million naira, 30 million. Now those places are going for 150 million, and we have clients who bought into those projects at that time in 2020. It's not up to, maybe let's say 5 years now, but imagine the return that they have gotten over the 5 years. There's no capital market that can give you these kind of return aside from the real estate market. So what the developers do is they use your money to build the projects, and then they pay you your ROI. And the truth is that the ROI is very possible. Anybody that tells you it's not possible is lying. It is possible, very possible, especially in Nigeria. In the Nigerian real estate market, is highly possible. I already mentioned here, and you can check studies around 30%, 40% is the minimum return you can get over 6 months of a new real estate transaction. So what that means is that they can comfortably pay you your money. But remember, again, you need to check the processes. You need to check the documents and everything involved, so that you can save yourself. So real estate is used as asset backing. You earn while the developer uses your capital for projects. Investing in project construction, which is sort of like continuation of the buyback scheme is that you contribute funds toward developing new housing or estate projects. You earn a share of profits or fixed returns upon project completion. And then you can track milestones with transparency and documentation, as earlier mentioned. Highlight of it is that you're not just buying land, you're funding real growth. Now, we know some will have clients who started with this buyback thing in 2021 as well, and now they've been able to afford a full purchase of an apartment for themselves. They said with 10 million naira, they came in as a group of friends. There were 5 of them that bought in, they did 2 million naira each, and then they now are able to buy an apartment. They didn't have the money to buy an apartment, there was no apartment for 10 million when they started, but now based on the buyback scheme and investments in construction, they've now been able to own an apartment themselves. So this is one way that you can own the real estate asset for yourself in your name, and also earn returns as well. And then another model is through the off-plan project. Now this one is channeled at you owning the project, the asset, right? It's not a return in terms of physical cash, but what it also gives you is that you're able to sell at any amount that the market is selling at the time the project is ready. These projects usually run from 12 months to 24 months, and then you're able to sell out at any time that you want to sell out within the project stage while you're still paying. The good thing about this one is also that you pay little amounts to start, and then you get to pay monthly or quarterly. But for you as the investor, your plan is to sell out at the end of the transaction. I mentioned that projects were sold for 35 million in 2020, 2021. This was a 2-year project. So the clients did not pay at once. They paid over 2 years. And now they are able to sell at the current price of the property in the market. So the point is that this is another model that you can use. But this one doesn't give you in terms of physical ROI or repayments from the developer, but you get it from the through the market. And another thing why you should do off-plan is affordable entry. The potential of returns is really high. And then with off-plan, you buy into a project before it's completed, secure the property at a discounted rate, is usually sold below market value, and benefit from capital appreciation as the project nears completion. This is very ideal for young investors who want to start small, and it's only safe. The truth is only safe if the developer is credible, so that they are able to deliver your project as they said that it will be in the floor plan that you saw or the building design that you saw. There's no risk along the line. Now, these are things that you would check. I mentioned documentation already before time. I think in Nigeria, you can key into our off-plan project with as low as 10% entry fees. We work with only trusted developers, and we have delivered more than 30 off-plan projects, so happy investors. When I say off-plan projects, it means that one project, for instance, can be about 100 units of houses, 50 units of apartments. We've delivered this across, over the years that we've run the company. And the red flags, I would not fail to mention the red flags are no legal title or deed. There has to be a proper link between the land or the assets and the developer that is you're investing in, and then promises of high returns with no risk, right? So they're promising you, oh, you know what, it's land in Ibadan somewhere, and you're going to get 200% returns on investment. That's not possible. You need to check that transaction very well. So the way you do it is, okay, how much are you selling? Because that's actually a guarantee of how much you're going to earn. How much are you currently selling now? It's easy for you to see how much properties are actually selling in that place at the time as well. That's finished projects are selling. And so from there, you can also tell whether it's the truth or not, whether they can actually pay you that returns. I mentioned here that the minimum return you can earn you can resell a project in 6 months is about 30%. So that means they can comfortably pay you. They promise you a 40% return on investment over 12 months or 50% is not impossible to do. So that's one of the things, that the ways you can check. And of course, another one is no verified company history or developer track record. You want to see that the developer is still in business. You can go as far as checking them on CAC at the filing for annual returns. What projects have they done? They're currently working on a project. I mentioned that your MOU has to be backed to a project, right? Your investment MOU has to be backed. If you're not buying off plan, if you're investing to get ROI, it has to be backed to a project. So what that means is, if you are investing 5 million naira today, it has to be tied to one project by the developer, and saying that this is the project that you are investing in. You've seen that project, you see the documents for that project, and you know that that project is in existence. So don't just link it, because it's not equity, right? You're not just buying into shares of the organization. No, so it has to be backed to a project. And then there's also pressure to commit immediately without you taking time to do your due diligence. These are like some of the red flags that you should look out for. And then I think means we also structure investor protection. All our offers are backed by real assets with verified titles, there's legal agreements, investor documentation, transparent project updates, and ROI timelines, independent valuation, and due diligence. You're allowed to run your due diligence yourself and ensure that you have all the things. And then collaterals as well. There's also check guarantee aside from the projects tied to your transaction. There's also other little guarantees like checks and all of that, pre-signed checks for your returns on investments. So scam or not, here's the truth, not opportunities are equal. The final verdict is that real estate isn't a scam, but poor due diligence is. If the offer is transparent, backed by real assets, and driven by experienced professionals, then you are on safe ground. So you're looking to start your investment journey, we're very clear. You can reach out to us and we'll give you more information on this. But trust me, it's something that is going to be very rewarding for you. We have thousands of people who have earned their returns through this, and it's really, really, really rewarding. Thank you.
Thank you so much, Imelda, for the brilliant presentation on real estate investment. That was so comprehensive enough, and also for sharing with us the 3 pillars of true investment and other informations that you mentioned, and also for putting out there that real estate investment is not a scam, but you have to do your due diligence before investing in real estate. So now I'll be calling on the next speaker. I will call on Oyeyinka. If you can hear me, please unmute and share your slide. Thank you. And I would like to quickly say that the time for this presentation is 10 minutes. So you can as well do to try to stay within the time limit so that we can maximize our time for other aspects of this webinar. Thank you. Yinka, can you hear me? If you can, please unmute and let me know. Okay, so while we wait for him to get ready, okay, awesome. Thank you.
All right. Can you hear me, please?
Yes, I can. Thank you.
Right. I'm glad to be here. This is also to thank the management of BusinessDay and everybody that has planned this event. So I knew beforehand that I won't have some more time, so let's just get right into it, right? So our Alcariwa is a self-licensed fund manager that was established in 2017 with leverage on technology to provide innovative financial solutions for businesses and individuals. Currently, we manage over 1.2 million clients. Now, having said that, I'll just take you through about 8 points that I've noted. First is that let's quickly look at the indices. We know that inflation is at 23.71. NPR was held at 27.5 yesterday. Crude is currently at 67.85. Average T-bills rate is at 18.58. Now, as millennials, there are 4 critical things we need to look at in trying to making money, because what are you investing if you don't have money, right? So it's very important that we focus on freeing cash so that we can invest more. That's very critical. At Cowrie-wise, we focus on not just saying we should bring money, but on how you can also make some money that you invest in the future. So let's go right into it. So it's either you're an employee or a self-employed professional, or a business owner, or an investor. Let me quickly unpack that. An employee is someone that does the normal 9 to 5 and your salary. And it's very, very good to be an employee. There's one employee that is earning 1% of the PBT of an organization. So it's excellent to be an employee. You can also be a self-employed professional. Say a lawyer that just the lawyer is, the owner, the person running the organization, So you could be a business owner, that's someone that owns a business. But when you become an investor, that means you are running at scale and you really don't need to be there for the business to work. So that's just that. Then we'll go to spending money. It's very critical that you have a budget, and your budget has to be divided into 4 pillars. I mean, this could be in any other way, in any other textbook, but this is my textbook. So your needs, your wants, charity, because Africa is a peculiar situation. So charity, you have to take care of that. Investments. You also have to look at your assets versus liability in spending money now. So assets are things that give you value, while liabilities depreciate in value. So you have to look at that critically, when you are spending money. So you have to also spend wisely. One very critical thing is that you don't borrow to fund wants. Don't borrow to fund wants. Always borrow to fund assets. Very important. Then for your debt management, it's very critical that you manage your debt, outlay perfectly. Don't take on more debt to pay one debt. Pay down debt with the highest interest first, and things like that. So 4, we'll look at investment channels. So we'll look at it from 3 perspectives. It's either you're investing in assets, and one very popular asset is your property, which my colleague has extensively spoken about. Then we also have your finance, so your finance channels through which you can invest. So you have your mutual funds, you have your fixed deposits, you have your treasury bills, you have your bonds, etc. Then of course you need to also invest in business. So either you're investing in your own business, you're investing as an equity holder in the business in case you're an employee and you don't have a lot of time, or you're a partner in the business. Then 5, we look a bit more into the finance investment as depicted in number 4. So you have your treasury bills, so your fixed income instruments, including your treasury bills, your fixed deposits, your commercial papers. There are different notes out there in the market, fixed notes, which could be denominated in Naira or dollars. You have your banker's acceptance. It's not very popular in Nigeria anymore, but it used to be something, back in the day. You have your bonds. Ronke has spoken about Euro bonds. You also have your, FGM bonds, or what I would like to call Naira bonds. Then you have your variable income instruments, which, mutual funds apparently is a variable income instrument, but it's the safest one I know. So mutual funds, your variable income instruments, equities, ETFs, commodities, and so on. Now, dimensioning your portfolio. And this is just, a postulation. Your portfolio is a postulation because everybody's reality is different, So your fixed income instruments could be 50 to 80% of your portfolio. That's within the finance side or your finance side of your investment channels. 50 to 80% in money markets, out of which 50% of it, 50 to 80% in fixed income instruments, out of which 50% should be in money market instruments, which is a bit near liquid. Then your variable income should be between 20 to 30. It looks aggressive, but it's because mutual funds should be at least 20% of that, so that you can, cater to liquidity whenever you need it in trying to do business. Now, number 7, some strategies. Our advisor utilize your money market mutual funds as a staging investment. And I'll explain this. Once you get income, you can front load most of your funds into your mutual funds. Money market mutual funds are doing anything between 18 to about 21 or 20%. Let's just say 20% to be conservative right now, per annum, which is still right now in the market. Invest in dividend yielding equities, if you've seen what some of the banks have done lately, you see that some of them have paid equities, and there's people that take position in equities that pay dividends. So you don't really need to do capital appreciation investments. You can do mainly the ones that yield dividends. Protect yourself and your assets using insurance, trusts, and whatnot. Buy properties, very important in your investment portfolio mix. Then invest in business. I always point to these three perspectives: your finance, your assets, and business investment. So at the level of, cowrie-wise, we have 31 high-yield mutual funds, from about 11 credible fund managers in the market. I mean, if you look at it, it's cut across the money market mutual funds, which we call conservative. We have the ones that are aggressive, which are equity biased, and but we have 31 credible, mutual funds, high yield. So the first thing you just need to do is go to www.cowriewise.com and boom, you will see them. Next, we have Nigerian Naira and USD denominated fixed notes. We also have lock saving feature. So if you want to save towards rent, you want to save towards buying a house, you want to save towards buying a car. So this is dedicated, disciplined locked savings that you can, utilize so that at the end of the day, you can achieve, your financial goals. We also have high yield investments for HNIs. We put a little extra cherry on top of what is normally on our platform for HNIs. Then we have Sprout, which is a business investment platform. On the Sprout platform, we have about 10 high-performing money market mutual funds that businesses can invest in. So rather than leave your funds in your account, you've not paid salary, you've not paid your tax, you've not done some statutory remittances, why leave the funds in your account? Or you want to do some development in future. So Sprout can cater to your, so rather than leaving funds in your account, you can invest on the Sprout platform. We also have Nest, which is an investment channel for children. So we believe that even as millennials, some millennials will have kids that are teenagers, and, as young as they are to teenagers, you can start creating an investment channel for them. Then we also have Duo, which is almost like a joint account, but it allows spouses invest, friends invest towards a particular goal. And we also have different other investment enablers. So we have something around football, around basketball, whereby if you support, like I support Arsenal forever. So if Arsenal scores a goal, say in the next season, my account gets debited and it goes into my investment account. So I think these are credible, very good investment channels that you can use to manage your funds. Thank you very much. Back to you.
Yinka, it was brief and well-detailed presentation. Thank you for opening our eyes to different investment opportunities out there, especially at CowrieWise, and how we can leverage them instead of, like you said, instead of leaving your money in the bank, just sleeping there. There are a lot you can do with your money and also get to receive high yield income from it. So thank you. I would like to call on the last speaker, Fatima. If you can hear me, please go ahead with your presentation. Thank you.
Thank you very much. I will be sharing my slide. Please confirm if you can see my screen.
Okay, your slide is up now. I can see.
Okay. So I'm also going to, good afternoon once again. Good afternoon, everyone. I'll also be talking about real estate investment opportunities. And I would like to talk about how do we unlock real estate investment opportunity in 2025. Imelda has spoken about real estate, and whether we like it or not, real estate is still one of those investments that keeps on giving. If you're able to manage your real estate investment very well, the interest rate can be as high as, like you mentioned, about 50%. So, like I said, real estate sector in Nigeria is being redefined, and real estate investment is worthy. And most people will say, what if I don't have funds? I'm looking at it. What if I don't have 100 million naira to buy a property? Can I start small? Yes, when it comes to real estate, you can start small. So, the overview, what are the statistics? Why do I think it is worth my while to real estate in this time? And the market size, real estate market size is quite large, about 2.25 trillion by 2025, and is a 5.2 contribution to the GDP. Currently, there's an housing deficit. It is serious. About for it to give a firm balance at 30 million units need to be built in 2025 to bridge that gap. So, and again, because of urban growth, there quite a lot of people moving from the rural areas to the urban areas. You have people migrating to Lagos, Abuja, these places on a daily basis. And rental yield is also high, especially in some areas in Lagos. Some places like in Lekki, Ibeju, Ekpe, land prices have doubled in 3 years. So it's also very lucrative. You can think about it, as a millennial, you're looking at it, where can I invest my money? Not just stocks, like as has been mentioned, it's good that you diversify your funds. And real estate is solid. And one of the ways you can invest is maybe you do direct property, land banking. So what most people do is that they buy land in undeveloped plots from emerging corridors. I'm talking like places around the Ibeju, Lekki, area. You can buy undeveloped plots or undeveloped area and you keep it. That's land banking. You hold to it until when the rental prices or the sales prices change, then you're able to flip it. That's a form of investment. And you can also do residential development for those that can do it. You don't need to start big. One thing about real estate is that you can start small, but you'll get there. You don't need to have millions, the hundreds of millions for you to start real estate. So you can build houses for growing demand. And believe me, it's already a ready market. One thing about it is that when there's market for it, it will surely move. And there's already ready market for housing. And so you can build residential development for the growing demand, then flipping. What you can do is that you can buy properties. There are some properties that somewhere in some places that are dilapidated already. Some of them have gone bad, but the area is very lucrative. You can buy those properties, renovate, then resell. Those are forms in which you can make money. You can renovate. You can renovate and resell. Then commercial real estate, to investing in offices, retail, in warehousing. When it comes to real estate, most people, when they want to invest, they focus on residential, then they leave commercial. But it's always good also in real estate, diversify. So if you have the funds and you are investing in residential, commercial also, or you can do joint ventures. Joint ventures means that you are pulling resources together with some people, and what you are just doing is that you are sharing risk and profit with those people and build to rent. So people have properties that they have just to generate passive income. Things like the Airbnb or the short leases. The short leases are those from 1 year to 2 years. You can have it just to generate passive income. Another thing again is REIT. Most people overlook REIT. And REIT is real estate investment trust. And REIT is either public or private. Public REITs are those ones that are already listed in the Nigerian exchange. Is accessible. You can start with as low as 10,000 naira. Some of these real estate companies are already there. So what they do is that they pool resources together and they do commercial and rental properties that will continue to generate income. So you can continue to pay your dividend from the rent that you collect. You can do that for as low, invest them. Some of them, if you check and on the Nigerian exchange, you see some of these companies are already listed. Then private REITs too. Private REITs are managed by licensed firms. They are target HNI products, and some allow food self-pooling. It means that people can come together. There's a development that is going on. Everybody will contribute together towards that development. And when those profits come, we share. We already have an agreement on how these things will be shared and what commission goes to each person. And you can also focus on estate, rentals, and hostels. Those things, no matter what, those kind of investments in real estate, no matter what, you would always still move. People still want to live in estate. People still always want to rent, and there will always still be hostels, for university or students in colleges. Then the benefits, passive income, like I said. And for rich, the risk is very low. There's no property management issue. So you're not concerned about, oh, I need to renovate, I need to do this, I need to do that. And it also urges against inflation. Another thing we talk about is what investment location. So someone is thinking, where are the places that I think I can invest? And what can I do? The Beju Lake Ekpe area. Oh my God, I'm sorry, someone asked about 5, 6, 7 years ago, and someone told someone, please go and buy a place on there. You'll be wondering why. But because of the infrastructural boom that's currently going on there, the Dangote refinery, the coastal road, the seaport. I was talking to someone last week and telling me that I wanted to buy a land around that Kukuwaja, and which he could have bought some years ago. When he was told about what the current price was, even I was wow. And that is because of the fact that there's infrastructure in that area. Victoria Island is a good place, luxury rentals. Like I said, you don't really need to buy. There's a lot of crowdfunding that's going on now in real estate. Two people can come together, own a flat, you share the fees. Then plant cities along the Ekpe corridor. There are so many smart cities that are being built along the Ekpe corridor, that are solar enabled, solar cities that can help. In Abuja, Lube, Kuje, Guarikma, there are good rentals and good growth around that area. Meitama, Sokoro, even Port Harcourt, Abeokuta, Ibadan. People neglect those areas. And because of the fact that land is relatively cheap there compared to Lube, people buy. The rail has made it different. So you can be in Lagos in an hour and you get to Ibadan in 2 hours. So you have people that are shopping. So even if it's chocolate apartment, rental apartments, those things can still work. I also mentioned Asaba, Enugu, and Oka. So what are the things to watch out for? Infrastructure trends to watch out for. Everywhere there's infrastructure change or there's a technological change, it really makes good impact in real estate. Like I said, the Lagos Calabar Highway, those people that own houses or land along that corridor, they are set to experience boom. Their rental prices because of the fact that people want to be close to those things. Those are the factors that affect. And because real estate is driven by location, location is what makes or mar your real estate investment. So when you are set the right location, definitely you will get your returns. Your returns might vary based on your location or on the kind of investment that you have. Then tech in real estate, there's quite a lot of technology. And when technology is infused into a sector, what it does is that it makes it advanced, it makes it easier. So there are virtual inspections now, there's digital land verification. Lagos State is issuing e-survey now so it's easy for you to be able for them to track where your land is located. And again, the 360 view, you don't even need to be there to be able to visualize some of these places. Then places where there's sustainable smart development, like I mentioned, those ones are also places to watch out for. So final thoughts and call to action, start small, whether it's REIT or it's land banking. Like I said, speak to professionals. If it's land banking, what you just do is that just make a search, confirm, not land by speculation, confirm and know so that you'll be able to invest rightly. Then follow trends, urbanization, infrastructure projects. Just on the news, what are the projects that government wants to do? For example, government is trying to set up a university somewhere, you know that basically the needs of the people would be housing, accommodation for both the students and the lecturers. There will be need for market, there will be need for hospitals. So when you listen to this, you will know where to diversify and strategize. Then collaborate, use cooperatives, speak to real estate professionals that have been in the field, not just to make money, professionals that will tell you and have studied the trend over time to be able to advise properly and always stay informed. Always do your research. There are so many webinars that you learn from that you'll be able to get information as it is. So it's a compelling opportunity for everyone, not just millennials, but everyone wants to invest. Real estate is solid. Real estate is a solid investment. And one of the things that you really need to look at, like Imelda said, there must be an exit strategy. Real estate has good exit strategy. Either you're selling or you're refinancing. So you must always make sure that your investment has good exit plan. So again, I said the demographics. One of the things that you also check is the demographics. We're having younger people more and more, and you find out that the accommodation trend is changing. So those are the things that you need to consider. Everybody has a unique chance to invest in real estate and to build wealth. So for us at HH Holdings, we have a subsidiary that is HH Real Estate. And what we always say to our clients and our investors that come to meet us is that you don't need millions to enter the real estate market. You just need the right information. You need a long-term mindset and the willingness to start. With this few points of mine, I hope I've been able to convince somebody out there to consider real estate investment. Thank you.
Of course, you have been able to. Thank you so much, Fatima. That was brilliant. Thank you for sharing your opportunities and your knowledge with us. So we'll be going straight to the question path, and I would like to say that already we have almost like exhausted our time with the presentation. So this question path, I would like to say 2 minutes each for the questions, please, so that we can make it brief and also still be able to like pass the message. Thank you so much. So over to you, Ronke. I would be starting with you. If you can hear me, what are the most promising investment opportunities in the current market, and what trends are catching your attention right now? Ronke, can you hear me?
Hi, can you repeat your question, please?
Okay, thank you. I said, what are the most promising investment opportunities in the current market, and what trends are catching your attention right now?
Okay, thank you for the question. So, just from the financial services space, I would say the equities market is a good market to look at. We've seen the equities market do like really, really good numbers in terms of returns that our clients or our customers have been able to get from the market. And this is just because, I mean, the economy is on the upswing, even though the layman might not necessarily believe that. But, when you look at the economics, you look at the indices, a lot of sectors are doing very well and their stocks are, good to watch. For instance, the banking sector, when you look at the recent recapitalization of the banks, if just by way of example, last year when the banks did most of their POs, I think Fidelity came out at about 9 naira 75 kobo. It's doing something in the zone of about 18, 19 currently. So if you had entered at that point, if you were entering because you wanted to trade, I mean, you can offload right now. I think Zenith Bank came out at about 36 naira 50 kobo. Zenith is doing about 48, 49 in those regions. And I think at some point it got up to 50. So the banking sector is a very good sector to look at when you are when you're thinking about purchasing equities. Technology, telecoms, is also doing very well. Oil and gas sector is also doing very well as well. And aside that, in recent times, we've seen a lot of commercial papers come out. And I think the goal here is just to look at the fundamentals, read about the companies, look at their financials, and match it against your investment goals, and then take a decision. Thank you.
Thank you so much for highlighting the current market opportunities and promising investment opportunities that people can tap into. So over to you, Imelda. How can investors identify potential investment opportunities in such dynamic markets? Haven't heard about or investing in equity markets, and also looking at the banking sectors and other sectors that their stocks are doing really good. So how can investors identify the potential investment opportunities in such dynamic markets?
Okay, so first, I mean, I would add the real estate market because that's one thing, and then ways to identify potential investment opportunities. Really staying informed, reading financial news, following market trends, and then even new markets, understanding new markets better. So when you hear information like this, when you join events like this, and then you listen to people speak, go back and read about those sectors, ask questions. There's a lot to learn online. Also attending events, joining investor groups also really helps, because there you can hear more. When you hear sectors like the real estate sector, you're hearing agriculture, digital and technology, you're hearing that, oh, there are returns in these sectors. What you need to do is also go and do your own homework and your own research. And most importantly, look for businesses solving real problems in innovative ways, because that's really very important. Real problems like housing problems, technology problems, agriculture problems. These are industries that will always have high returns on investment. So you want to look for those kind of industries and businesses that are solving these problems. And then, for instance, in the real estate industry, it could mean noticing cities with population growth, and then infrastructure projects or high rental demands. That's, for instance, in the real estate industry. That's one way that you can check. And then also talk to experts, basically, and attend events like this to get more information.
Thank
Thank you.
you. Thank you so much, Imelda. I like the fact that you said stay informed and also read news. And at this point, if you're not reading Business Day, if you're not following Business Day news, you might be missing out, because we share a couple of informations about market trends and equity, euro bonds, and lots more about stocks and other investment opportunities. So do well to read Business Days news daily, and also join our webinars every month and other aspects that you can get informations about investment. So now I would like to call on Oyeyinka. So this question is about capitalizing on growth sectors. So how can investors take advantage of growth trends in specific sectors such as healthcare or technology? I mean, you've spotlighted how CarryWise plays roles in managing people's investments and investment opportunities they have. So how can investors take advantage of the growth trend? Oyeyinka.
Right. Okay. Yes, I'm with
Thank
you.
you.
I'm with you.
Thank
So,
you.
so there are different types of investors. So there are individual investors, there are institutional investors, there are there are VCs, there are private equity investors, and things like that. So, say healthcare. Let's take healthcare as a case in point. So, if you're an individual investor, how the way you can take advantage of the growth in that sector is perhaps to invest in equities in that sector. So last year, I personally invested in some equities around health. And there's been some trajectory in that area. So you also want to look at areas around ETFs. Assuming in Nigeria we have exchange traded funds that were focused on some sectors. Perhaps it would have been good, but ETF is also good. So someone managing an ETF by now would have been looking at some top rated equities that that are riding a trend. So ETF is also good as well. So let's come to if you are a VC or a private equity firm. So right now, very, very importantly, the healthcare industry is also doing well. There's been a lot of inflows into the health tech and, just basically healthcare generally. So at the level of institution, those are ways you can, take advantage. Also, as a plain institution as well, how do you take advantage? Same equities, same ETFs, and of course, perhaps you want to invest as a business in a business that is targeted towards healthcare. So, those are some ways you can take advantage of, good trend. Position yourself in that sector. You also want to look at fund flows into such sectors as a way to know, if you should move into such sectors. You want to look at government policies that can also shape the fund flows into such sectors and things like that. Thank you very much. Back to you.
Thank you so much, Oyeyinka. Okay, so for Fatima, you talked a lot about tapping on the emerging trends, and you use the instance of the Lagos Calabar Coastal Road and how people can tap into emerging trends. So this question is very good, that you tell us, how can investors position themselves early to benefit from emerging trends?
Thank you
Fatima,
very much.
okay, okay, thank you.
Thanks very much. First thing first is stay informed. One of the best ways to stay informed. Like Imelda mentioned, this is a good opportunity and to learn and understand what Flexit is all about for emerging trends. Stay informed, read newspaper, join groups where discussions are then set your goal. What exactly do you want? Because before you go into any investment, especially real estate, you need to set your goals. Do I want long term? Do I want capital gain? What exactly do I want? When you set your goals, then you begin to learn. You study about it. It's not just about building houses, excuse me, and you find that what you're eventually doing is you're just adding to the number. You're just adding to the vacancy numbers in that place. So one of the things is study. Do proper. Most people neglect that part of feasibility study. They just have money they want to build. They have no idea why they are building this particular unit in this location. Would it give me the interest rate I want? Is this something I can flip off? So these are things that people should watch out for. Do places like the buy now, then to boom locations. That means you can buy locations that are cheaper, but have prospects of booming in future. Another thing is that you can do crowdfunding, you can do JV, you can do fractional ownership. There's quite a lot of things that you can do. And but the most important thing is stay informed. Stay informed. Just listen as the trend is changing and know where you can fit in. Thank you.
Thank you so much. So we have exhausted our time, so I won't be able to take more questions. But I would like our speakers to, um, quickly answer this question. So I would like our speakers to, before we close, I do like each of you to tell us what are one investment myth you want young people to stop believing. We hear a lot of things about, like Imelda spotlighted about real estate, people moving the motion, are real estate scam, or is it not scam, or something like that. So what is one investment myth that you would love young people to stop believing about investment, so that they can start setting their path right and also investing their funds in something really good? So I would like Ronke to go ahead and let us know what
Okay,
means.
so I think one of the myths is that you have to have a lot of money before you can invest. I mean, that there's nothing further from the truth than that, because you can start with as little as 1,000, you can start with as little as 5,000, depending on the investment that you are looking at. And I think a lot of times, people don't realize the power in compounding. You know, before you know what's happening, you have a lump sum. And just off the top of my head, if you do, even if you put it inside what you call the local savings, the piggy bank, if you put a 5,000 in that piggy bank every month, at the end of the year you have 60,000 naira, funds to play with. So one myth is that you have to have a lot of money before you can start your investment journey. It's not true. You can start with what you have. You can start where you are and then grow, scale as you progress in your career, or as you get more funds. Thank you.
Thank you. So to our listeners, you don't have to have 1 million before you start investing. So start small. Thank you so much for that, Ronke. So I would like Imelda to also share with us what means she would like us to stop believing about investments.
Mm. Okay, so I mean, I've already spoken about one, which is scams. And the truth is that if you do not do your research and ask proper questions, you would never really come out of those mindsets of things being scams. Yes, I know that they are scams, but there are also things that actually really work, and then you just sit back and not get value from it. I know those days when they were doing some real estate projects on the Iba Road where Lasso is. And yeah, I'll give an example of my dad. He would say, "Oh, I don't want to buy." When his cooperative was buying at that time, he said, "No, it's far. It was just far away. It's not within. I'm not interested," and all of that. And but now houses there, we know what the reality is on that axis, right? And it's just the same thing everywhere. So we need to have a mindset shift, right, as to investment generally. People need to begin to understand that it goes about beyond what we have heard in the past. There are things that actually do work, and then look out for those things and that work. So yes, that's one myth that people have. Things are far fetched. Everything is a scam. There's no real thing happening, and then because of that, you're still where you used to be and still keeping monies in the banks, and it's not giving you any returns. They are instead taking money, deducting every time from your would-be savings, as the case may be. So yes, grab every opportunity that you have. But yes, of course, grab it intelligently, but you do not want to be left behind, basically.
Thank you so much, Imelda. So over to you, Oyeyinka. Please tell us one investment myth you would like the young people to debunk from today.
All right. I'll still build on Imelda's point on credibility of the markets. It is very important that we young people know that the markets are very credible. One very important point I need to note here is that there are a lot of foreign portfolio investors in Nigeria bringing billions of naira into the economy. So they must have seen something. So stemming from that, what we need to do as individual investors is to check, do your homework, look at the sector you want to invest in. Are they regulated? Yeah, at least there are some regulators in the finance space. There's NICOM, there's PENCOM, there's CBN, there's SEC. Is the organization regulated? What is the start and finish of the funds flows? Because there's a cash conversion cycle for every investment. What's the start and finish? What is the institution utilizing the funds for? How do you get your money back? I think you need to ask, those questions before you invest. At the level of Cowrywise, we've partnered with some very credible fund managers to put their own mutual funds on our platform. And we did so because these fund managers are SEC regulated and SEC licensed. So it is very, very important that, individuals and institutions do their homework, even in the investment you want to undertake. What's the corporate governance behind that? Are they aligning with ESG? Are they, aligning with, so many other things that, may be personal to you? Is it even halal? So these are some of the questions you need to ask. Don't go on a bandwagon effect. Do your personal due diligence. And like I said ab initio, a lot of foreign portfolio investors have funds in Nigeria, in the equities market, in the money market, in real estate, everywhere. So why are you not taking a piece of the pie? So ladies and gentlemen, that's my solution. Thank you.
Thank you so much, Oyeyinka. So I would like to hear from the last speaker, Fatima. Do you have any investment myth that you would like the young people to debunk from today?
Yeah.
Thank you.
Yes, thank you. Most people that believe that real estate is a get-rich thing. You want to get rich, you do real estate. You find that there are developers everywhere. And I say developers because everybody is developing something at this moment. And I just want to clarify, real estate is long term. You have to have patience, you have to be persistent. And it is used to build wealth over time, not get it immediately. So thinking that I invest in real estate now, I become very rich. It will help you build your portfolio as well. So it takes time, it takes persistence, and it takes knowledge. So you just don't jump into it because there's development going on. Everybody's cashing out, people are building, people are buying. is long term if you want to stay sustained in real estate. So just like the last speaker also said, information is key. Whether real estate, whether health tech, or whether tech, whatever it is, make sure you stay informed. Ask the necessary questions, get the clarification. Don't be rushed. Don't let them give you that urgency. You need to sell. You need to buy now. If you don't buy now, tomorrow is gone. Let it go. Another one will come. So that's how I'm thinking.
Thank you so much. This has been such an insightful conversation, and I would like to thank our speakers. Thank you for your time and sharing your knowledge with us today, from spotting the trends to aligning your investment to also setting your goals right. It is clear that this generation has the tools. It just take the right information and the right action for you to get started. So if you're thinking of starting out today, the best time to start is now. Start small, stay informed, and also stay consistent with your investment. Thank you so much. I am Ethel Adono, and I am very much delighted to have hosted this conversation today. And until we see again, thank you and do have a wonderful day.